Okay, let's get started. The committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. This hearing is entitled Examining the BSA AML Regulatory Compliance Regime. Before we begin today, I'd like to thank the witnesses for appearing. We certainly appreciate your time out of your schedule to be able to be here and your participation. Look forward to your comments. And I now recognize myself for 2 minutes for the purpose of delivering an opening statement. The goals of the Bank Secrecy Act and anti-money laundering legal regime are laudable. Financial institutions and government agencies should work together to prevent money laundering and terrorist financing. However, the reality is that well-intentioned regulation has spiraled out of control and resulted in a breakdown of what should be a collaborative relationship between law enforcement, financial regulators, and institutions. Today, regulators essentially deputize credit unions and banks as law enforcement and allow for a regulatory regime that's both opaque and punitive. BSA AML related settlements have increased significantly in both amount and frequency. The institutions are reporting surges in total investment in AML, and their consumers, especially those conducting financial transactions internationally, bear the brunt of this regulatory cost. I fear the BSA AML process oftentimes benefits no one, not the institution and not law enforcement. Also concerning is that financial institutions are more risk averse than seemingly ever before, partially as a result of the regulatory structure. The rampant de-risking seen in recent years actually, in my opinion, increases risk to the financial system, proving that BSA AML regulatory regime to be ineffective and to some degree dangerous. To be clear, the intent of today's hearing is not to discuss opportunities for financial institutions to more easily skirt the law or to help nefarious actors participate in illegal activity. We're here today to discuss improvements that could benefit both law enforcement and financial institutions, while simultaneously creating a more effective BSA AML regulatory construct. I look forward to a robust conversation with our distinguished panel and thank them for their participation. With that, the chair now recognizes the ranking member of the subcommittee, the gentleman from Missouri, Mr. Clay, for 5 minutes for an opening statement.
Thank you, Mr. Chairman, for holding today's hearing to review the compliance regime for the Bank Secrecy Act and related anti-money laundering requirements, and I thank the witnesses for sharing their perspectives on this topic. A 2016 GAO report found that from 2009 to 2015, federal agencies assessed roughly $5.1 billion in fines, forfeitures, and penalties against financial institutions for violations of BSA AML requirements. In one notable case, HSBC was required to enter into a deferred prosecution agreement with the Justice Department and forfeited more than $1.2 billion for violations of the Bank Secrecy Act and illegally conducting transactions with Iran and other sanctioned countries. A 2012 bipartisan staff report issued by the Senate Permanent Subcommittee on Investigations found that HSBC exposed the U.S. to money laundering, drug trafficking, and terrorist financing risks by operating its correspondent accounts for foreign financial institutions with long-standing severe AML deficiencies, including a dysfunctional AML monitoring system for account and wire transfer activity, an unacceptable backlog of 17,000 unreviewed alerts, insufficient staffing, inappropriate country and client risk assessments, and late or missing suspicious activity reports. The Senate staff report also criticized the OCC for weakly enforcing BSA AML requirements with respect to HSBC and included a series of recommendations that I think should be part of our discussion on this topic. So as the subcommittee examines the effectiveness of the current BSA AML compliance regime and reform proposals, these facts should help remind us that we still need a strong system that stops bad actors and prevents the criminal exploitation of financial systems to conceal the location, ownership, source, nature, or control of illicit proceeds. There are a number of proposals that Congress should consider. Ranking Member Waters introduced legislation last term that would, among other things, significantly increase civil monetary penalties for both institutions and individuals for willful and negligent violations of the BSA. And Congresswoman Maloney has introduced legislation on beneficial ownership that would eliminate the ability of bad actors to conceal their activities in shell corporations. And Mr. Chairman, at this time, I yield my time to Congresswoman Maloney.
First, I want to thank my colleague, the ranking member and good friend, for yielding to me and to the chairman for holding this hearing. And I'd like to also thank Chairman Henserling for creating first the Anti-Terrorism Task Force and the Anti-Terrorism Financing Committee. I think it's critical, reflects the really challenges that we confront. The anti-money laundering rules for financial institutions are an incredibly important tool for combating terrorism financing. And if they can't finance their terrorist activities, they're not going to have them. So it's a very important part of our national security strategy. But because criminals and terrorists are constantly changing their strategies to elude law enforcement and to hide their identities from financial institutions, the anti-money laundering obligations also require financial institutions to do a great deal of work. So to the extent that we can streamline this process without letting our guard down and making it easier for criminals and terrorists to access the U.S. financial system, that would be a win-win for everyone. The Clearing House, which is represented on the panel today, published a lengthy set of recommendations in February on how to streamline the anti-money laundering framework, and I think it is a serious report that deserves our consideration and support. I'd like to highlight one section of the Clearing House report in particular. Section 2 of the report recommends that Congress pass the Beneficial Ownership Bill, which is bipartisan, introduced today by Chairman Ed Royce, former Chairman King, and myself. The bill, called the Corporate Transparency Act, will require companies to disclose their true beneficial owners when a company is formed. States would have the option to collect this information themselves under our bill, but if the state isn't doing it, then the Treasury Department would collect beneficial ownership information as a backup. This information would be available to law enforcement and, importantly, to financial institutions as well, with customer consent. This is important because it helps financial institutions comply with their Know Your Customer obligation. If their customer is a company, financial institutions can't know who their customers really are unless they know who the beneficial owners of the company are. This would also reduce the regulatory burden on financial institutions because they wouldn't have to spend an enormous amount of resources investigating their own customers and trying to figure out their beneficial owners. Instead, they could just refer to the Treasury database to figure out who the owners of these companies are. So this bill is a win-win. It's good for our financial institutions, good for our law enforcement, and good for our national security. Thank you.
With that, we yield 2 minutes to the gentleman from Pennsylvania, the Vice Chairman of this subcommittee, Mr. Rothfuss.
I thank the Chairman for the yielding, and I want to thank him for having this hearing today. Getting our Bank Secrecy Act and anti-money laundering policies right is a very important issue for me and my district. In fact, it's a life or death issue. Just a few days ago, we marked the International Day Against Drug Abuse and Illicit Trafficking. It was a time to reflect on the drug epidemic that has destroyed so many lives and continues to ravage our hometowns. It was also an opportunity to take stock of how our current policy framework fails to achieve its objectives. This committee's efforts to interrupt the finances of the transnational criminal organizations and gangs that pump the heroin and fentanyl poison into our communities can ultimately save lives. If we can cut off the flow of cash, we can greatly hinder the ability of these groups to do us harm. I'm looking forward to hearing from stakeholders today how we can create a more potent BSA AML regime that makes the best use of scarce public and private sector resources. It is clear to me that our existing framework puts heavy burdens on financial institutions and appears to emphasize compliance with rigid standards over efficacy. We need to be looking at how technology, innovation, and greater cooperation can be employed to yield better results in this fight. President Trump wrote in his letter marking the International Day Against Drug Abuse and Illicit Trafficking, quote, "We will not stand idle as our families are devastated, our communities are hollowed out, and our nation's future is diminished." I could not agree more with that sentiment, and the work that we're doing here today is an example of Congress taking action to bolster our defenses against illicit financing and to bring down the criminals who cause so much pain in communities across this country. We have a moral obligation to achieve these ends. I thank the chairman, and I yield back.
Gentleman yields back. With that, we recognize the gentleman from North Carolina, the Vice Chairman of the Subcommittee on Terrorism and Illicit Finance, Mr. Pittenger.
Thank you, Mr. Chairman. And I appreciate you holding this important examination of the Bank Secrecy Act and our AML CDF compliance regime. In addition to serving on this subcommittee, as stated, I do serve as Vice Chairman of our Subcommittee on Terrorism and Illicit Finance, which is also strongly engaged in this topic. I'm also encouraged that both subcommittees are taking a hard look at BSA modernization. We will need both subcommittees' expertise if we are to establish a streamlined and effective regime to protect our financial system from illicit use. As we examine the BSA, this committee should explore innovative technologies and policies that can facilitate compliance and targeted information sharing. The goal should be getting the most relevant, timely, and actionable information into the hands of our financial regulators and law enforcement, while providing targeted data sharing from the government to financial institutions with privacy and civil liberty protections that will limit the focus and oversight of financial institutions. We have a great opportunity to achieve this goal, and I look forward to the testimony of our witnesses and their suggestions for where we can improve and modernize our current system. Thank you, and I yield back.
Gentleman's time has expired. Today we welcome the testimony of Ms. Faith Anderson, Senior Vice President and General Counsel for American Airlines Federal Credit Union on behalf of the Credit Union National Association. Mr. Greg Bauer, President, the Clearinghouse Association. Mr. Lloyd DeVoe, President and CEO of Sun State Bank on behalf of the Florida Bankers Association. Ms. Heather Lowe, Legal Counsel and Director of Government Affairs, Global Financial Integrity. Before we recognize the witnesses, I'd like to ask unanimous consent for that the gentleman from Florida, Mr. Ross, be recognized for the purposes of making a brief introduction. Without objection, the gentleman from Florida is recognized.
Thank you, Mr. Chairman, and it's my pleasure to introduce one of our witnesses today, Mr. Lloyd DeVoe, President and CEO of Sun State Bank in Miami, Florida. In addition to his position with Sun State, Mr. DeVoe serves on the Board of Directors and Executive Committee of the Florida Bankers Association, and he is testifying today on behalf of more than 100 Florida banks represented by the FBA. Mr. DeVoe brings over 25 years of experience in the banking industry to today's hearing, including 12 years as Chief Operating Officer with Bank Atlantic and City National Bank of Florida prior to joining Sun State Bank in July of 2014. Founded in 1999, Sun State Bank is one of Florida's most vibrant community banks, and we want to see you continue to be a vibrant community bank with 3 locations and 45 employees serving Miami-Dade County region. We are fortunate to have Mr. DeVoe here today to provide us with insight into the role of community banks in Florida and across the nation in the fight against money laundering and terrorist financing. I want to thank the Chairman for calling upon Mr. DeVoe to share with us some of his the community and the Florida Bank perspective on this important issue, and thank you to Mr. DeVoe and the rest of the members or the rest of the witnesses today, and we look forward to your testimony. I yield back.
Thank you, Mr. Ross. That's such an compelling testimony there. I might want to make a deposit to Mr. DeVoe's bank here. Thank you. Each of the witnesses will be allowed to, I'll be recognized shortly here for 5 minutes to give an oral presentation of your testimony. Without objection, each of your written statements will be made a part of the record. Briefly, the lighting system, for those who haven't been here before, red means go. Green means go. When the yellow light comes on, it means you have a minute, so be ready to start wrapping up. And when you hit the red button, why? That means we need to stop and move on. A couple quick notes. We may have votes interrupt this. We're looking at votes sometime around 4:15. If we're not done, we may ask the witnesses to please return or stay put here, and then we'll return as quickly as we can. If not, we'll hopefully be able to wrap up shortly. The other thing is, for those members that are asking questions, which we have a large turnout today, if you can keep it within the 5 minutes, that'd be great. But with that, Ms. Anderson, you're recognized for 5 minutes.
Thank you, Chairman Lukemeyer, Ranking Member Clay, members of the subcommittee. Thank you for the opportunity to testify on this important topic. I am Faith Yeva Anderson, the Senior Vice President and General Counsel for American Airlines Federal Credit Union, headquartered in Fort Worth, Texas. I am also the Vice Chair of the Consumer Protection Subcommittee of the Credit Union National Association, on whose behalf I am testifying today. American Airlines Federal Credit Union proudly serves over 274,000 members. We began as a single-sponsor credit union for American Airlines over 80 years ago. Following 9/11, we extended our membership beyond American Airline employees to include air transportation groups such as TSA and FAA employees. My credit union's asset size is $6.5 billion, which is quite small compared to regional or national banks. Like all credit unions, we are a not-for-profit institution owned by the very members we serve and established to promote thrift and provide access to credit for provident purposes. American Airlines Federal Credit Union is committed to financial security compliance and applies whatever resources necessary to ensure our operations are solid and our members are protected. However, since the 2008 economic crisis, credit unions have been subject to more than 200 regulatory changes, totaling nearly 8,000 Federal Register pages. The new regulatory regime makes Bank Secrecy Act and anti-money laundering regulatory compliance even more daunting. Nevertheless, my credit union has a staff dedicated to ensure we fully comply with BSA AML requirements. We conduct detailed record keeping and spend thousands of hours and dollars on due diligence. In fact, due to increasing BSA requirements, we have split our BSA department into two separate sections, one to work on the investigative side and one to work on the risk side. This adjustment was made so my credit union could efficiently keep up with the many filing and record-keeping requirements. Of all the requirements on BSA AML, the most burdensome and time-consuming are investigating open suspicious activity report cases, monitoring the members' accounts and transaction activity for unusual behavior, conducting the exhaustive research on an average of 600 potential suspicious activity scenarios per month, and filing these reports as well as currency transaction reports. It generally takes my credit union 3 to 5 days to process an average suspicious activity report for one case, and we have about 30 to 40 filings per month. In addition, quality control is costly and time-consuming. Preparing for our annual exam on BSA AML compliance requires the work of 3 full-time professional staff members and takes about 2 full months. This time is dedicated to ensuring reports are filed accurately, the risk assessments are completed, and there have been no mistakes made to the process and filings. My credit union dedicates a great amount of time, staff, resources, and money to BSA AML requirements. The median size of a credit union is less than $30 million in assets with a total staff of just 8 employees. The reality is the cost of technology for monitoring and ensuring compliance with BSA AML regulations is disproportionately burdensome on smaller and less complex institutions. Nevertheless, with the changes outlined in my written testimony, the federal government can ease the compliance burden for financial institutions while maintaining the protections needed. We urge legislative and regulatory changes to address the redundancies, unnecessary burdens, and opportunities for efficiencies within the BSA AML statutory framework. In particular, we support changes to minimize the duplication of the same or similar information, provide additional flexibility based on the reporting institution type or level of transactions, curtail the continually enhanced customer due diligence requirements, increase the currency transaction reporting threshold, reduce defensive filings and simplify the reporting requirements of suspicious activity reports, and allow for greater regulatory and examination consistency among regulators. My written testimony provides details on issues that credit unions face regarding BSA AML compliance and also outlines common sense changes. Credit unions are committed to the fight against terrorism and related crimes. I hope my testimony will help this subcommittee find the balance between protection and undue burden. Thank you.
Thank you, Ms. Anderson. Mr. Mr. Bear, you're recognized for 5 minutes.
Thank you. Chairman Luetkemeyer, members of the subcommittee. Over the past year, the Clearinghouse has devoted substantial resources to analyzing the current system for anti-money laundering and countering the financing of terrorism. Today, I'll present some of the conclusions that we've reached. Our current AML CFT system is broken. It is extraordinarily inefficient and outdated and driven by perverse incentives. Fundamental change is required to make that system an effective law enforcement and national security tool and reduce collateral damage it is doing to global development, financial inclusion, and other U.S. policy interests. I'll begin with an analogy. Imagine an army where officers are evaluated based not on how their units behave in battle, but rather based on the accuracy and punctuality of their expense reports and the casualties suffered by the unit. The auditors do not have sufficient security clearance to be briefed on the battle that have occurred or read any after-action report. Thus, their audits reflect only the losses suffered by the unit itself, not the casualties inflicted upon the enemy. What sort of an army would this system produce? One led by officers averse to outside-the-box thinking and risky advances, and more inclined to entrench their positions and excel at paperwork. This army inevitably would be led by a George McClellan, not an Eisenhower or a Patton. The U.S. AML CFT regulatory regime circa 2017 is not dissimilar. Law enforcement and national security officials are the end users of the information that banks produce. They value a risk-based approach to AML CFT, with banks using innovative approaches that detect the most dangerous crimes. But compliance with AML CFT rules is not examined or enforced by law enforcement or national security officials, but rather by bank examiners. These examiners are in a no-win position. On the one hand, they are excluded when the bank they examine is pursuing real cases with law enforcement or national security and receive no credit for those cases. But if something goes wrong, if a corrupt official organization turns out to be a client of the bank they examine, the examiner takes the blame. Thus, the rational response is to focus on what they know and control. Extremely detailed policies and procedures and simple metrics. For example, the number of computer alerts generated, the number of suspicious activity reports filed, and the number of compliance employees hired. What gets measured gets done, and providing valuable intelligence to law enforcement or national security agencies does not get measured. Writing policies and procedures and filing a lot of SARs does. So, almost 2 million SARs are filed per year now. The largest banks file 1 SAR per minute. Even then, the value of those SARs to their end users is not measured, so the measure of success is generally volume alone. The greatest cost of this dysfunction is an opportunity cost. Emerging technology has the potential to make the AML CFT regime dramatically more effective. Artificial intelligence and machine learning could revolutionize this area, and banks continue to discuss ways to utilize those technologies. But those strategies require feedback loops, which do not exist in the current SAR system. They also require a mandate from government to shift resources from investigating and filing SARs on low-dollar crimes and instead investing in modern methods for detecting high-impact crimes and terrorist activity. Law enforcement and national security currently have no authority to provide that mandate. Another cost of the current system comes as banks are pushed to eliminate clients in countries or industries that end up creating political risk, so-called de-risking. Here, a whole other group of government stakeholders has concerns. Global development officials concerned about human suffering in countries cut off from correspondent banking and remittances. Trade officials worried that American business will have to retreat along with American banks. Diplomatic officials concerned about a lack of influence when U.S. companies leave. Again, though, these agencies play no role in the current system, and federal prosecutors seeking record fines when a problem does develop do not internalize those costs. In 2016, the Clearinghouse convened at 2 symposia a remarkable group of stakeholders, including foreign policy, development, and technology experts. Their goal was not to save banks money, but to do what's right for this country. The resulting report is attached to your testimony. You will see numerous recommendations in that report. The most important one, though, is for the Department of the Treasury to play a strong leadership role in setting priorities for the system. This should include reclaiming, through FinCEN, supervisory authority over the largest internationally active banks, which file the majority of SARs and present the toughest issues. A dedicated FinCEN exam team for this group of firms could receive appropriate security clearances, meet regularly with law enforcement, and work to develop metrics in this area. Most importantly, it could establish priorities and stick to them. Finally, one important change to the current regime does require legislation, ending the use of shell companies with anonymous ownership. I was pleased to appear this morning with Congresswoman Maloney to endorse the Corporate Transparency Act that she is co-sponsoring with Congressman King and a bipartisan group of members. I hope to discuss it further this afternoon. Thank you very much for your time, and I look forward to your questions.
Thank you, Mr. Bauer. Mr. DeVoe, you're recognized for 5 minutes.
Chairman Luke DeMeyer, Ranking Member Clay, and members of the subcommittee, my name is Lloyd DeVoe. I am President and CEO of Sun State Bank, a community bank founded in 1999 with $200 million in assets in 3 locations in Miami-Dade County in South Florida. Sun State Bank has 45 employees and focuses on the needs of small businesses, consumers, and real estate investors, including non-resident aliens. I appreciate the opportunity to be here today to discuss the challenges in complying with the Bank Secrecy Act. Clearly, BSA compliance is an important building block for our national security, but the world has drastically changed since it was first adopted in 1970. As the United States takes steps to combat terrorism and financial crime, now is the time to update BSA compliance in order to develop a system suited for the 21st century. The resources devoted to compliance, especially BSA compliance, are significant for a bank our size. Sun State Bank has 7 people in compliance, 6 of which are just in BSA. BSA is our largest department. We have only 4 full-time lenders. That means we have fewer staff devoted to making loans that benefit the community than we have devoted to compliance. Our experience is not unique. In 2007, 14% of the Florida banks had 5 or more BSA officers. Today, 38% have 5 or more. While some of this increase is due to acquisitions, much has been driven by regulatory pressure and the heightened regulatory risk of enforcement actions. This is not a recipe for success. Direct BSA expenses were more than 10% of the bank's total expenses in 2016. The more we spend on compliance, the less we spend on services for our communities. Every $100,000 spent on compliance translates to $1 million less that we can lend. The added cost of BSA compliance, on top of significant cost of Dodd-Frank, has led to the disappearance of many smaller banks in Florida. For example, 111 banks merged or sold after Dodd-Frank was enacted. That's a consolidation of 50% of all Florida banks in just 7 years. Even more important than the direct cost of BSA compliance is the impact on our customers. For example, many legal businesses are labeled high risk by the regulators. This means banks must collect more data, do more analysis, provide more oversight, and engage in more site visits, all of which translates to higher costs for us and our customers. The best option in many cases is not to bank certain industries and certain customers, and to even ask existing customers to close their accounts. From the bank's perspective, the economics of compliance make it unprofitable to maintain certain accounts. This has serious drawbacks. First, it makes no sense to create a system that drives legitimate customers outside the formal banking system to less regulated or even unregulated providers. Second, it creates a series of financial transactions that may not be reported or available to law enforcement. Third, it can create a shadow financial system that is readily available for criminals and terrorists. We need to modernize our approach. Banks should not be serving as undeputized law enforcement agents. For example, rather than doing a full-blown investigation on a suspicious transaction, banks should file a short suspicious activity report and let law enforcement agents do what they are trained and qualified to do. Moreover, the partnership between law enforcement and the private sector needs to be a two-way street to succeed. Banks produce a huge amount of information, but seldom get any feedback on its use or its effectiveness. More communication from law enforcement is needed to help banks focus resources in more useful ways. We also need to eliminate red tape that restricts banks from sharing information with each other. Finally, we need to focus on real risk appropriate to the institution. For example, many of the 5 to 10% of our customers that are considered high risk by the regulators would not even be on the radar of very large banks. Our customers complain all the time that small banks are asking questions that larger banks never ask. We all want to fight money laundering and terrorist financing. We are only asked that regulation be sensible so that resources are used in a wisely and efficient manner to combat the crime. Thank you for holding this hearing today. I look forward to answering your questions.
Thank you, Mr. DeVoe. Ms. Lowe, you're recognized for 5 minutes.
Chairman Luke Meyer, Ranking Member Clay, and members of the subcommittee, thank you very much for the opportunity to address you here today. You have my biographical details in front of you, so I won't belabor that. I hope my contributions to today's hearing will help you take measured and informed decisions that are really in the public's interest as well with respect to the U.S.'s AML regime. In my written testimony, which is about 17 pages, I provide information and opinions regarding trends in compliance, suspicious activity reports, know your customer, KYC, and customer due diligence, and balance of activity and obligations between FinCEN, the regulators, and the private sector. And I would stress balance. I do think that's really important here, and that's something that's been mentioned by other panelists today. Some of my remarks also directly address some of the proposals by the Clearinghouse. So, to summarize some of my key points in my testimony, the first point is that money laundering and the technology that can help us combat both are both evolving, and in light of this, it's appropriate to consider whether changes to our regulatory structure should be made. Equally, however, it's critical that Congress understand and carefully weigh the potential benefits against the potential ramifications that may be negative before making decisions in this area. Regulation and enforcement are primarily dissuasive measures because they can carry potential liability, and we should be very careful when we decrease those dissuasive measures. The second point I really wanted to stress here is that AML compliance and reporting is undertaken by a really wide range of entities and persons, going far beyond the banking sector. You have bankers in front of you today, but any proposed changes being considered should really be looked at in light of that wide range of actors, those types of entities and persons. Third, some types of entities and persons should be required to have AML programs in place that currently don't, such as those involved in real estate closings, lawyers, and others. The banking sector cannot and should not carry this responsibility alone, especially where these persons act as proxies to open the door to the U.S. financial system for criminals and their money. Fourth, Congress should request from the various regulators data regarding formal and informal enforcement actions pertaining specifically to AML BSA violations and deficiencies so that they're better able to independently assess the appropriateness of the enforcement regime currently in place. I wanted to point out as well that both small banks and large banks have been the subject of major money laundering cases. You don't often see the smaller banks in the news and hitting the national news because they tend to be considered a local matter. Sixth, enforcement against money laundering is primarily through the identification of regulatory infractions as opposed to through criminal charges of actual money laundering. This may be because it's easier to find the evidence of regulatory infractions, the burden of proof is lower, the cost of doing so is far less than pursuing criminal money laundering charges, but the dissuasive effect is just as great. However, when one looks at the cases where enforcement was merely through identification of deficiencies of AML systems and filing requirements, the hallmarks of serious criminal money laundering are in those cases. As a result, decreasing the ability to enforce using the regulatory approach may have serious negative repercussions on compliance and, ultimately, criminal access to the U.S. system. My seventh point is that suspicious activity reports are meant to be just that, reports of suspicious activity. Requiring bank employees to determine if activity is in fact illegal before filing a SAR as has been recommended by the Clearinghouse would actually be counterproductive, I think, in a lot of ways, including increasing the burden on bankers who would have to then actually make a legal determination that they didn't previously have to make. I do think that there are some issues with respect to how much information needs to be provided on SARs and how much background work banks need to do before filing those, and I think that's something that we should really seriously discuss, but that bright line, illegal, legal line, I think is very counterproductive. The Clearinghouse also recommends that greater information sharing take place among banks and with the government in a number of ways. We generally support that greater sharing of information in the AML area, but it has to be done with appropriate privacy safeguards. Where it may result in people being essentially debanked, there has to be some sort of system for redress for people to be able to kind of prove that, well, actually what they're doing is legitimate activity, and we need to be taking that into account. Ninth, it is critical that information about the natural persons who own and control companies, otherwise known as the beneficial owners, is finally collected by either the state or the federal government. and that it's made available to both law enforcement and to the financial institutions. Companies with unknown or hidden ownership are the #1 problem in the AML world, and the U.S. cannot continue to allow our failure to act here to put the U.S. and the global financial system at risk. I'm really pleased that this morning the bipartisan bill was introduced in both the House and the Senate to do just that. We wholeheartedly support the Corporate Transparency Act and thank Representatives Maloney, King, and Royce for introducing the House bill. 10th, I would strongly caution against transferring responsibility for setting AML priorities for individual banks from those banks to FinCEN. Banks really are best placed to understand their business and their systems and the money laundering risks that are inherent in those things. They really need to be able to create.
Can you wrap it up pretty quickly?
I do not. I have another minute. No.
You have 5.
Oh, I'm
Everybody
sorry.
else had 5.
Am I?
You're way over.
I'm on the wrong side of 5. That would explain it. I apologize. I'm like, I have a minute left.
But we thank you for your testimony. Hopefully we can,
Sure.
you can delve into more of your suggestions here as we go through the discussion.
Sure.
Thank you. Without objection, the gentleman from Ohio, Mr. Davison, is permitted to participate in today's subcommittee hearing. Mr. Davison is not a member of the subcommittee, but he is a member of the Financial Services Committee, and we appreciate his interest in this topic and welcome his discussion here when he returns. With that, I recognize myself for 5 minutes, and we begin the questions. You know, it's interesting to hear your discussion, and I certainly appreciate everybody's testimony this afternoon. You know, it was lots of interesting comments from the standpoint of Mr. Bauer's analogy to the Army with regards to how this whole structure is working. I thought that was pretty enlightening, and bankers have become law enforcement officers instead of being bankers. I think we need to put everybody back in their own pew. But I was kind of interested in your discussion, Mr. Bauer, when you talked about I think some of the tech help that can, or technology that can actually help detect some of this stuff. I know with the fintech explosion here, there seems like there's a lot of ability to go in and assess data. And is there a place for that? Are we doing that now? Are we not doing that? Because it would seem to me that we can figure out what kind of magazine I would like to read based on all of the things in my background here, what I do business, what I eat, where I go, and yet are we not doing that with regards to suspicious activities?
So it's a great question. I mean, among the experts we considered in our consultant in our work were folks who are expert in big data and AI. And just as background, I think what's important to understand is the SAR database was created 25, 30 years ago for a very different purpose. It was a suspicious activity report where there were a sufficiently small number of them that one of them was read by an AUSA somewhere in this country. So they were actually written to be read, every one read by someone. Now that we have almost 2 million filed per year, there's no one reading them in the first instance. Instead, what law enforcement does is word searches against that database. So too do the banks also do searches against the database, basically looking for patterns. So we've gone from sort of providing leads in a very personal way to a prosecutor to basically having a big bunch of data. And what do you do with that data? And that's where the system's never caught up. Because the first thing we heard from the big data folks is you have to have a feedback loop. If you want your algorithms to get smarter, you have to know for a given SAR, is that a good SAR or a bad SAR? So they've even proposed you should just have law enforcement have a green button, red button, good SAR, bad SAR. That would actually make things work a lot better. But there are a lot of other concepts like that that you could apply once you start thinking about that database in terms of a searchable bunch of data as opposed to an individual lead. Also, you can think about, and I think Mr. DeVoe was talking about this, the format of it. When it was an individual lead to be read, it had to be very carefully written in great syntax and reviewed at 3 levels. But if it's just going to be searched, do you even need a paragraph? Can you just dump in the data from the underlying account? So those are the kinds of questions that aren't being faced now.
Okay, very good. Mr. DeVoe, you're in the trenches every day. You deal with this every day. So can you explain to me the impact of the rules and regulations presently on you kind of outlined it with regards to the numbers of people in there, but are you finding problems? Are you finding people who do illicit activities with the process that we have, Or can you give us ideas on how to do something different that would actually streamline the process so that you don't have to have more compliance officers than you do loan officers?
Thank you, Mr. Chairman. To give you an example, when you set a customer up in your system, you build a profile on that customer. And if that customer deviates from the profile, the BSA area gets an alert. We got 7,100 alerts last year. We filed 29 SARs. We had to go through every one of those alerts, and any alert that creates suspicious activity is then turned into an investigation.
Okay, now, let me interrupt just 1 second. Do you do the investigating, or does law enforcement do the investigating?
The bank.
The bank does the investigating.
The bank's BSA department does an investigation, and it may eventually lead to a SAR. Last year, we filed 29 SARs. 15 were generated from the alerts. So we did 7,100 alerts, turning into 15 SARs. That's a lot of work. We have about 7 or 8% of our accounts are high risk, and that's what generates a lot of our alerts.
Okay, very good. I think you made a comment also with regards to the consistency of the rules. I think you made the comment with regards to being a small bank. You guys, a lot of times, are looked at differently than larger banks with regards to your client base. Can you expand on it just a second?
Yes, sir, thanks. We have, we run our database to determine how many high-risk accounts we have. And we've had regulators come back and tell us that number's not high enough. You can't have 4% high risk, you need to have 6 or 8% high risk. A high-risk account is a high-risk account. It shouldn't be determined by an arbitrary number.
So they're asking you to go in and fudge the numbers in so you get to a higher number, or because I would assume you're giving the actual amount of high-risk business in your book of business.
The way the high risk is built is by parameters associated with the country they're doing business with, the amount of money they're running through the account. So if you set the level of account transactions at a higher or lower level, you'll generate more alerts. So basically they're saying, I wouldn't use the word fudge, but they're basically saying you need to decrease your cash flowing through the account to pick up more alerts.
Okay, thank you very much. My time's expired. With that, we'll recognize the gentleman from Georgia, Mr. Scott, for 5 minutes.
Thank you very much, Mr. Chairman. Mr. Bear and Mr. Devant, I'd like to first of all direct this to you, too, to respond. Last month in May, we received a report from the FBI's Internet Crime Complex Center. And according to this report, attempts at cyber wire fraud globally surged in the last 7 months of 2016. Fraudsters sought to steal some $5.3 billion in schemes where they pretended to be trusted business associates, requiring wire transfers. And this spike in fraud saw a total number of business email companies' cases almost double from May to December of last year, rising to 40,000, up from just 22,000. So, Mr. Bear, I listened to your testimony, and I think I want you to address the issue of these financial innovation units. It seems to me that you sort of plowing down this road as a possible way of dealing with this. And so my understanding is, and get me wrong, is that we need to provide regulatory safe harbors to these financial innovation units or institutions so that these units can operate in a sandbox outside of bank examiners' sanctions. Now, that's a lot. What is the sandbox? How well does this work? Is this the pattern we've got to follow on? And then, Mr. DeVal, I'd like for you to agree or disagree. Mr. Bear.
Sure. I mean, in some ways, it's unfortunate that you actually have to request a safe harbor or a sandbox in order to do the right thing, which is to innovate and try to find more interesting ways or more effective ways to catch very bad people doing bad things. The problem that's arisen, however, and we've heard this from multiple banks, is that, you know, and to some extent this gets back to Mr. DeVoe, where there's a certain number of alerts that are expected or a certain number of SAR filings. When you are trying out a new way of identifying criminal behavior, you don't have policies and procedures for that. You're experimenting. You may not know what the yield is supposed to be. If you have a new algorithm, you don't know how many alerts that's supposed to trigger. And yet, banks do face criticism when they do that. And so what they're really saying is, yes, we'll comply with all the rules that we're complying with currently, but we want to have the chance to innovate and find new ways to do this, which I would hope could be relatively uncontroversial.
Well, let me tell you a little bit of my concern about this is, one, in providing a regulatory sandbox approach to combating terrorism, could we be hurting the very people we are trying to help if financial institutions can operate in a sandbox like this? Mr. DeVoe, you want? And Mr. Barry, you can chip in too.
I think the fighting BSA crime is a team effort across the board. The question for me is which members of the team should be doing what. For banks, we get very little feedback on what works and what doesn't work.
You get very little feedback from whom?
From law enforcement, from FinCEN, from the people who actually receive our BSA product, our SARs, our any reports, our OFAC hits, our 314 list hits of suspected terrorists. So if we get no feedback, it's very hard for us to know what works and what doesn't work. But if we make a mistake, we know very quickly what we did wrong. And it may not have been any type of transaction or illegal money moving. It could have been just that they didn't like our policy, they didn't like our program. So there has to be some kind of safe harbor to say, you know, you have a decent program. One of the analogies I use from my old farming days is we're looking for a needle in a haystack with BSA. If we can make that haystack smaller, we have a better chance of finding that needle. So why don't we look at the things that work and do those and maybe do more of those, and look at the things that don't work and let's stop doing that.
Well, so one of the things that you're saying is work are these financial units. You don't see a problem there?
No, not at all.
Okay, and the fact that so many of them are manned by former law enforcement people certainly could help with getting the communication. Is that right, Mr. Barr?
Yes, and I wanted to add too, I mean, although there aren't really policies and procedures for it, banks are very good, I believe, of all sizes about alerting law enforcement when they actually see something that's truly suspicious, as opposed to just an alert you have to file because it hits some parameter. There's actually a term for this now called super SAR, and banks actually walk those into the U.S. Attorney's Office or the FBI or whoever and say, look, we filed the SAR like we always do, but this one really means it.
All right, thank you, sir.
Gentleman's time has expired. With that, go to the gentleman from Pennsylvania, Mr. Rothfuss, for 5 minutes.
Thank you, Mr. Chairman. Mr. Baer, in your testimony, you described the current AML regime as, quote, inefficient and outdated and driven by perverse incentives. You described a system where financial institutions face broad reporting requirements and file large numbers of SARs, some of which are purely defensive in nature. I think we can all agree that our BSA AML regime should seek to provide law enforcement with actionable intelligence that they can actually use, rather than volumes of SARs that waste resources and provide minimal value to law enforcement. With this in mind, do you believe that the provisions of the Bank Secrecy Act with respect to required reports of suspicious activity by financial institutions are overly broad and as a result produce too many reports that are not particularly useful to law enforcement?
It's a great question, and it's a very difficult answer. I mean, there was a time when we used to say there were too many SARs and it was adding hay to the haystack and making it more difficult to find needles. That was when someone was actually reading every SAR. You can actually argue now that no one's reading them in the first instance and you're just running word searches against them. Why not have more SARs? That's just more data to search. The real problem there, though, and with the SAR database is, again, we've heard this from the big data folks, is the SAR database is filled with noise because you are filing a bunch of SARs on low-level, low-dollar offenses that no federal prosecutor would ever look at. And then it's really the absence of a feedback loop. So it's just not a smart database. So it's not necessarily more or less, it's more how are you going to search that database and how are you going to get feedback so that you're searching it smarter and smarter every day.
Are there any changes you would suggest to the reporting requirements, or is it more the feedback loop that you're looking at here?
Yeah, I mean, you can certainly, on the reporting requirements, for example, there's no dollar limit for insider abuse. So if you think a teller is taking some money and decide to let him or her go, you actually have to decide whether to file a SAR on that, even though, again, there's no federal law enforcement official in the world who will ever bring a case on that. The dollar limits have not been raised, I believe, since the BSA was originally enacted with regard to other low-level offenses. So, you know, a $2,000 theft, you're filing a SAR. And I think as both Ms. Anderson and Mr. DeVoe have noted, that's a lot of resources because you actually have to investigate those, like a law enforcement agency. And so you could take massive resources away from those, you know, low product, you know, low utility efforts and put them to much more useful purposes.
The report that the Clearinghouse issued, redesigning the U.S. AML CFT framework, discusses the possibility of setting up a no-action letter procedure at FinCEN. This would allow financial institutions to query FinCEN on enforcement issues. Could you describe how you would envision no-action letters working in this context?
I'll give you one example. I mean, with respect to sharing of information among firms under 314B. That's actually permitted with respect to two categories of offenses, anti-money laundering and terrorist financing. It's not quite clear what anti-money laundering means with respect to that exception, because just about any crime involves having to launder the proceeds of it. So, for example, in that area, you know, you would be able to write in and say, is this sort of offense the kind where I could share information with another financial institution to the extent I'm investigating that conduct? But there are a million questions like that where you know, firms have a very difficult time knowing what the exact right answer is, and are at great risk if they get it wrong.
Mr. DeVoe, in your testimony, you suggested that there are deficiencies in how Section 314B of the Patriot Act has been implemented. As you know, this section encourages banks to share information with each other. Specifically, you wrote, quote, the restrictions and red tape surrounding its use make it impractical. What are some of these restrictions that hinder bank-to-bank cooperation? Mike.
There's always privacy issues related to sharing information. In order to share information with another bank, you have to first file with FinCEN. And before you share, you have to also be certain that the other institution has filed with FinCEN. And then you can share information. And the process is not as smooth as it should be in terms of having to go through that procedure. Many banks do not do it. They just don't share the information.
Ms. Anderson, in your testimony, you wrote that it takes your credit union 3 to 5 days to process an average SAR for one case from beginning to end, and American Airlines Federal has 30 to 45 filings per month. How has technology helped to mitigate this compliance burden?
We use a system that generates the cases, and so what we do to eliminate false positives once a year is we look at the rules that we have established in the system so that we can eliminate the false cases, which takes time because the ones that I mentioned where it takes 3 to 5 days to research, it takes that long for a true SAR because you have to look at the deposits, you have to look at the lending system, you have to look what's in your imaging system. There's a lot of research in the background to truly grasp, you know, what is going on, especially if a lot of individuals are involved, and then you have to look at all those accounts. So what we try to do once a year is we do a quality review, and we look at our rules to eliminate those that have false positives.
Yield back. Thank you, Chairman.
Gentlemen, as time has expired, with that we go to the gentlelady from New York, Ms. Maloney, recognized for 5 minutes.
Thank you very much, Mr. Chairman, and I thank all the panelists for your testimony. Mr. Baer, I'd like to ask you about the beneficial ownership bill. You and your organization, the Clearinghouse, have been extremely helpful on this bill, and we deeply appreciate your support. And I want to thank you for that, but we both share a common goal, which is to prevent terrorists and criminal organizations from using the U.S. financial system to move their money around. And as you know, the Corporate Transparency Act will allow financial institutions to have access to the same beneficial ownership information that law enforcement has, because we want financial institutions to know their customers, and they can't know their customers if they don't know who owns the corporation. Can you talk about why it's important for both law enforcement and financial institutions to have accurate beneficial ownership information.
Sure. Thank you, Congresswoman. Actually, I think you noted this morning, which I think is a really important point, that the greatest benefit from that legislation is actually outside the banking system. As you noted, sophisticated criminals or kleptocrats know not to use the banking system, so they use LLCs to set up, to hold real estate or diamonds or art or whatever it is. So even if you left aside the banking system, there would be a great reason to enact the bill. For banks, I mean, they are already under, as we've discussed, a customer due diligence requirement from FinCEN, that they know their customers, and if it's a corporate customer, that they know the beneficial owners of that corporation. Currently, that's a game of hide and go seek, where they have to ask and then investigate. If they had access to an established database filed under penalty of law, where a corporation had to identify to the state or to FinCEN who the beneficial owners are, obviously that would reduce the burden on the bank, it would reduce the risk of getting it wrong, and that's all to the good. But I think the primary reason we support the legislation, it goes beyond those marginal reductions in cost and risk, and is more just to having a much safer system and a much safer country.
But it would be a substantial benefit to financial institutions, as it would reduce the regulatory burden on those institutions.
No, absolutely.
It was interesting in the 60-minute show that was done on the hiding of money in America. In that show, they interviewed 15 lawyers, and all of them were cooperating in trying to hide money in America. And what I thought was very interesting, they all said, don't go to a bank. Whatever you do, don't go to a bank, because they're going to know their customer, and that's not a good place to hide your money. It was disturbing to me to see the American legal system cooperating with an alleged criminal on how to hide money. But it shows that the banks have been successful in knowing who's there. But they, to a tune, every single one of them said, don't go to a bank, go to these LLCs, we'll help you set it up. How many banks are part of your clearinghouse?
It's 25. It's basically the 25 largest commercial banks in the United States.
And are they all supporting this legislation?
As well as we can determine, yes. We've asked them repeatedly, and they are all for it. Yes.
Well, I want to appreciate it. I represent an area that has a lot of terrorism financing, and any way we can crack down on it makes America safer. So thank you so much. I'd also like to ask. I'd like to ask the gentlelady from Ms. Lowe, and you've been very supportive for this bill too, which we introduced today with your support. And can you talk a little bit about why you think it's important, and how will this help crack down on terrorism financing in America?
So the issue of anonymous companies and beneficial ownership is not simply a U.S. issue. It is certainly a global issue. The U.S. started off actually quite strong many years ago, trying to push to make it more difficult to create anonymous companies, but has actually fallen quite far behind many other countries in actually operationalizing that. The UK today, for example, has a completely publicly available register of beneficial ownership information that, for example, U.S. law enforcement can access, U.S. banks can access now as they wish. So terrorism finance today, as you'll have heard in many of your hearings last year, it is not something that is done only by terrorists, right? There's a lot of working together among the criminal systems around the world, and that is, terrorism folks working together with organized crime, working together with human traffickers, because they're all using the same systems. And a fundamental vehicle for moving any of this criminal money is anonymous companies. Again, that is global. The U.S. is particularly important in this area. Sorry, I keep doing this. Because we do incorporate the most number of companies in the world, and the rest of the world thinks that they are very legitimate.
Gentlelady's time has expired. With that, we go to the gentleman from North Carolina, Mr. Pittender, is recognized for 5 minutes.
Thank you, Mr. Chairman. Thank each of you for your expert witness today. Previously, I had drafted legislation to strengthen and clarify Section 314, information sharing mechanisms that were written in the Patriot Act. How important is it for us in our anti-money laundering regime that we fully enable valuable information sharing between the government and financial institutions and between the financial institutions themselves? And in this legislation, part of our objective, of course, was to streamline this process, enabling the government to focus in on those entities that would be of strategic importance to them. Yes, sir.
Sure, Mr. Fisher. Yes, Congressman, I mean, I think it's very important. I think it's important under the current paradigm where I think it's more a matter of banks picking up the phone and calling each other to the extent that they share a customer and want to know if they're seeing the complete picture. I think in a future paradigm where there was, again, more use of data, I've been taught by the data folks that the importance is not the algorithm, it's how much data you're running that algorithm against. And so if you have a customer who has 4 bank accounts, you would certainly want to see the behavior at all those accounts in order to determine whether it's truly suspicious or troublesome. So, whether it's the informality now and picking up the phone or whether it's a future state where you're actually doing sharing of data in real time, I think it's important in both cases. Of course, there are privacy concerns here, and we respect those and think those should be addressed, but those seem solvable.
In respect to that, and when you consider, and I'll get to you, the privacy issues, if the government was able to identify those particular entities that they wanted you to respond back to, that in itself, it seems to me, would provide greater privacy for those relieving you of others that you would not have to be engaged with. Would you concur with that?
Yeah, agree, Congressman.
Yes, Ms. Love.
Thank you. Just to add, moving forward in looking at this issue, I think you need to be looking at the international data privacy regulations in place. The internationally operating banks are very much bound by those and what they can and cannot share. The European Union in particular has had the strictest regime, and that's a pretty wide-ranging regime, and they just adopted a new directive in May on this that will come into effect in May of 2018. Around the world, countries generally have adopted either the sort of European approach or the American approach, and so it is a sort of hodgepodge out there in the world as far as how these data privacy restrictions interplay with the information sharing. But I think it's something that this committee should look at in that sort of much wider context to understand what we can and cannot do and how to make that better.
Mr. DeVoe?
Yes, I agree 100%. The 314 list is a list of people of interest. And I love to get that list. That's our most efficient activity. We can just run it against our database, we get a hit, we report it. I think about the situation where you have and most of these people who are doing criminal activity, they're not banking at one bank. They're banking at 4 or 5 banks, and they could be moving money around. You can imagine the scenario where 5 banks are writing a SAR on the same person. If there was ways to better share this information so we could get to the information out there, we might save a lot of that redundant work.
And part of your objective is to have a safety capacity where you would be protected from litigation, sharing information one with another as well. Is that correct?
And I'd probably reaffirm Ms. Lowe's point in the sense that internationally, I mean, there are now currently restrictions on the ability of a given bank to share even within the bank to the extent that there's a foreign affiliate or even branch involved. So that's a very real concern.
Ms. Anderson, do you have a comment?
I just wanted to echo the remarks made by Mr. Lloyd DeVoe. So we would also like to share information, but as was previously mentioned, you're only limited to 2 instances where you can share information. And at credit unions, we have what's called shared branching, where if they're involved in a system, they can go to another credit union and make a deposit or withdrawal. And so it would be great if we could openly share that type of information so that we're not spending so much time, trying to call them or they're trying to call us so they can file a proper SAR or a CTR.
You have a safe harbor where you're able to provide information with each other.
Yes.
Thank you very much. I yield back.
Gentleman yields back his time. With that, we go to Ms. Velasquez from New York.
Thank you,
She's
Mr.
recognized for 5 minutes.
Thank you, Mr. Chairman. Ms. Anderson, Mr. Baer, and Mr. DeBow, I'm hearing from real estate title and settlement professionals in my district that criminals are doctoring up fraudulent wire instructions and sending them to home buyers. They make the instruction look legitimate as if they were coming from the title insurance company. The buyer then goes to the bank and sends a wire using the incorrect instructions. These funds then get transferred to the criminal before a series of transfers sends the money offshore. So my question to you is, can each one of you tell me what are you doing to prevent your institutions from being used by these criminals?
I'd like to start. Thank you, Congresswoman. What we do when a member wants to send a wire is that they have to complete a form, and we verify their identity. And so to make sure that we send funds from their account, because funds can go so quickly. And so we do authenticate our members, and we also contact them, and then depending on the dollar amount, it might have a second level of approval. And so that's what we tried to do to discourage fraud. But also what we do is we also have alerts that we send our members. If we see a pattern of a type of fraud, we try to send newsletters to them.
Thank you.
Thank you.
Mr. Baer.
I think I'll defer to the real bankers here. Although the clearinghouse runs a payment system, it's actually a bank-to-bank, very large dollar payment system, which I don't think would be relevant here.
From our perspective, one of the, I guess, the beauties of being a community bank is we know our customers. So when we get a wire request, in addition to the comments Ms. Anderson made, we call every customer on every wire, and we have a conversation with them. They complete a wire authorization form, and the information we call is in that form, and we verify using that form if we don't recognize the voice, which would be very rare that we wouldn't recognize the person on the other end.
And does your AML program detect these crimes before they're committed? And if so, how? AML?
Yes. Say it,
does your AML program detect these crimes, and if so, how?
Every wire in and out of the organization is run through OFAC, first of all. So, and we run OFAC every single night on every single customer and on every transaction that comes in and out of the organization. I talked about the 314A list, which is a list of people of interest to FinCEN. I like OFAC. OFAC is easy for us. We run it through the database. We know who the guys are looking after, or the places they're trying to avoid sending money to, and it's very, very helpful.
Thank you. Mr. DeBow, how can Congress help facilitate greater communication from FinCEN and a better relationship between law enforcement and financial institutions?
The first thing, as I said earlier in my paper, would be to share information with us to tell us what's working and what's not working. It's very difficult for us to know the things that we do that are valuable and the things that we do that are not valuable. And sometimes everybody gets busy and doesn't take the time to step back and take the bigger picture view of it and say, okay, what's working? I think if we could focus on the things that are working and maybe even do more of the things that are working, and stop doing the things that don't provide value, I think it would help the entire system be better. And I mentioned earlier the so much redundant work going on. So if we had the ability to share through some type of database or some type of sharing agreement where we could not have to repeat all the work that's been done dozens of times by other organizations, it would save us a lot of resources.
Thank you. I yield back, Mr. Chairman.
Gentleman yields back. We go to the gentleman from Colorado, Mr. Tipton, is recognized for 5 minutes.
Thank you, Mr. Chairman. Thank the panel. I'm hiding behind Ms. Tenney here for participating today. Very important issue. Appreciate the efforts that you all are making on this. Mr. DeVoe, you commented that your compliance department has grown significantly. In fact, become the largest compliance department when it comes to the AML. Is that accurate?
Yes, Congressman, that is accurate. In fact, it's doubled since 2011. But I think what I'm talking about here is the compliance department and the direct expenses related to compliance. We have 45 employees. We have 45 employees in BSA, not just the 6 that are in the compliance department. Every customer that walks through that door, you have to follow the Know Your Customer rules in the CIP program. You have to go through an extensive process to identify who that customer is. Anytime an alert, and that frontline officer that's dealing with that customer has to build a profile of that customer, of what type of activity, where every dollar is coming from and where every dollar is going to go, and the level of dollars and types of transactions. And we have to train across the entire, one of the 4 pillars of BSA is training. You have to train every person in the organization specific to their responsibilities in the organization. So when they should be out developing business and trying to generate new customers, they're spending a lot of time trying to onboard customers, and if an alert comes up, they're the ones that make that phone call back out. If a lender is trying to do a loan, they have a lot of responsibility around gathering BSA information, and so instead of being able to call on 5 customers that day, they can maybe call on 2 because the process takes so much longer.
Great. And Mr. Anderson, or Ms. Anderson, Mr. DeVoe, maybe you both like to be able to address this. Earlier this month, Treasury Department released a report on the current state of the financial system, and following the release, I wrote a letter, which is currently being circulated among membership or co-signers, encouraging federal regulators to institute policies requiring greater coordination for supervisory exams. In your testimony, you recommended that BSA AML reform include minimizing duplication of some or similar information, as well as greater regulatory and examination consistency among regulators to minimize the regulatory overlap. Can you expand perhaps on why this is an important issue, not only for supervised entities, but also for the regulators themselves?
Yes, the reason that it's a burden is because from a regulator's point of view is they usually have agreements with FinCEN on the examination process. And there's such a high threshold with BSA that if you have one minor inadvertent mistake, you're written up. So what our compliance department does is prior to our examiner coming in, we review the whole BSA program from top to bottom, and that's where we have 3 people dedicated to reviewing that we filed, all the SARs timely, that we didn't have to file any amendments, that our CTRs look right. We look at all of our risk assessments because, unfortunately, the way that it appears that the agreement is between the regulators is that BSA has a higher threshold than if you would have, for example, errors in lending. In lending, they may make informal comments, the examiner will, but if it's something to do with BSA, they will automatically make it a finding, or they could raise it, to a letter of understanding or a DOR. So that's why we spend so much time on quality control, besides doing, the day-to-day investigating and filing.
Anything to add, Mr. DeVoe?
We are a state-regulated bank, a state-chartered bank, which means we are regulated by state and by the FDIC and by FinCEN and just a lot of people. So we had the CRA compliance exam that started in early April, and when it finished, by the end of April, safety and soundness started, and it continued until just last week. So we have actually had over 60 days of regulators in the bank, a $200 million bank, going through everything we do. Those reports, it was the FDIC in both cases, but those reports then go to the state, and then the state calls us up and they want to come in for a visit and they want to relook at some of the things that we did. So we are put through a lot of hoops in order to comply with regulation. And, we understand as banks, we need to be regulated. We're dealing with people's money. But at the end of the day, we would rather be out enabling the dreams of our community, enabling the small businesses, creating jobs, revitalizing the economy. And let's eliminate some of the duplication so we can do that. We can spend more resources on developing our economy and developing our small businesses in our area.
Thank you. And, Mr. Chairman, I think I've got 22 seconds left.
I think you've got 22 seconds over, but that's okay.
All right, thank you. I yield back.
We're going to have to go back to basic 101 math here, but fortunately we're Congress and we don't take education well. With that, we go to the gentleman from Texas, and he's recognized for 5 minutes. Mr. Williams.
Thank you, Mr. Chairman, and thanks to all of our witnesses today for your testimony. And Ms. Anderson, it's good to see you. I always appreciate when the committee brings in a Texan, and I'm from Fort Worth. So thank you for being here. Ms. Anderson, let me start with you. Banks, credit unions are in an era of compliance. I see this in my own personal life. I hear this from small business owners like myself across my district. Every business is worried about making sure they comply with whatever regulatory authority oversees them. So along those lines, let me start by simply asking this. What is involved with preparing for your federal regulatory agency examination on BSA/AML compliance?
Thank you, Congressman. As I mentioned earlier, what we do is the three people do a top to bottom review of the whole program. And so we look at all the filings, we make sure that the risk assessment that we have is final and complete. We look to make sure that we didn't have any errors, and so that if we have to file any amendments, we will file amendments. We make sure that everyone has taken their required annual training because when the examiner comes in, they want to make sure that besides the employees taking the training, that also the board of directors has been given training, and that if someone wasn't there, for example, at a board meeting, that we sent them the presentation that was given. We make sure that they don't have questions. So it does take a full 2 months. We get all the documents ready for the examiners, and we have a stack this high of the documents that we have ready for them. So it is it's a time-consuming process, but we do that because we want to be in compliance with BSA.
Okay. Let me follow up. What kind of training, you touched on this, do your employees go through on a regular basis to make sure they're up to date on the most current rules? And you kind of touched on that. Go ahead.
So we do online training because we have branches in 13 states and the District of Columbia. But what we also do is we supplement that training with personal training specific to that department, whether it be a loan officer or the wire department or with a teller. So we do a lot of training when we see there may be deficiencies. So we're always training our folks to make sure they're always catching and reporting to us any suspicious activities.
And every now and then you try to do some business, right?
Yes, thank you.
Let me follow up. I've always said that banks, credit unions, small businesses are the first people you turn to when you need something in your local community, whether sponsoring the Little League team or donating an item for charity. And you all are certainly pillars of our community, and people know that. Now, in your testimony, you said that the American Airlines Credit Union was previously able to conduct online training for employees spread out over the 13 states. But now you must supplement that online training with one-on-one customized training, combined with the BSA/AML training every year for all 600 employees. This is obviously a huge burden to all employees. So my question is this. In general, have the increased BSA/AML compliance costs caused your credit union to miss out on opportunities to serve your community like we're talking about?
Yes. I always feel, and I'm sure other financial institutions do, that you never have enough people who are working in BSA. So I always try to ask for an additional head, or we always try to make sure we have the best technology so that we can support the BSA regulations.
Well, my last question would be, how do these burdens that we're talking about, BSA, AML compliance and reporting, affect the credit unions aside from just the training commitment?
So it takes resources away from the credit union as a whole, because those resources could be spent elsewhere on providing better products and services for our members. We could do more other types of services, like offering, maybe beef up and hire more loan officers, or maybe hire more credit counselors. But because of the BSA regulations, we're staffed up for BSA because it's such an important area, and it's looked at, very closely.
Well, thank you. I appreciate it, and I yield my time back.
Gentleman yields back. With that, we go to the gentlelady from California, the ranking member of the committee, Ms. Waters. Recognized for 5 minutes.
Thank you very much, Mr. Chairman, Mr. Lukemeyer. And I'd like to thank our witnesses who are here today. I have wrestled with what we can do to deal with violations of the BSA AML. And at the same time, I share some of the concerns about the smaller banks and smaller institutions that are having difficulty for any number of reasons that have been identified today. But here's what is causing us to be very concerned in this general area. In recent years, we've witnessed a seemingly endless string of money laundering violations by some of the largest global banks, with Deutsche Bank being the most recent large global financial institution to disregard the anti-money laundering requirements contained in the Bank Secrecy Act. Given that large mega banks continue to treat our current BSA AML enforcement penalties as merely the cost of doing business, it is what is driving our concern. When I take a look at some of the banks, big banks that have been involved with the money laundering, or at least disregarding any efforts that should be made to do the kind of detection that has been discussed here today. For example, in 2014, BNP Paribas, the world's fourth largest bank, agreed to pay $8.9 billion for knowingly and willfully moving over $8.8 billion through the U.S. financial system on behalf of 3 countries. The U.S. had already sanctioned for acts of terrorism and other atrocities. In 2012, HSBC agreed to pay $1.9 billion in U.S. fines for allowing itself to be used by money launderers in Mexico and terrorist financiers in the Middle East. HSBC allowed Mexican and Colombian drug cartels to launder at least $881 million. And in another case, HSBC instructed a bank in Iran on how to format payment messages so that its transactions would not be identified as an Iranian entity and be blocked or rejected by the United States. And again, with Deutsche Bank, it was $41 million for anti-money laundering deficiencies. So given all of that and our concerns about the smaller banks, what would you recommend that we do that could be helpful to smaller banks and credit unions, but at the same time not interfere with our ability to deal with what I've just described? Ms. Lowe?
Thank you, Congresswoman Waters. There's no doubt that there is some very willful and very egregious cases over the past several years that have come down in this area. And as I noted in my testimony, they are almost entirely based on what are essentially violations of the BSA AML procedures. But when you look at the cases, you see so many hallmarks of actual money laundering, but there is no criminal prosecution related to these, not of individuals nor of the banks. There are a number of reasons for that, as I mentioned, potentially, but what the DOJ tells me is that they don't have enough evidence to actually bring a prosecution against a person. I find that very difficult to believe when I read the statements of fact, because those statements very often contain things like emails where people are exchanging emails about exactly what they're doing and they know they shouldn't be doing it, right? So I find that difficult to believe. I want to really understand better why we are not prosecuting the individuals that are actually perpetrating these actions. I think that when a bank is fined, its bankers say, oh, that's terrible. I think that when a banker goes to jail, his fellow bankers say, oh, that is not going to happen to me and I'm not going to do that. And I think so we need to be focusing a lot more on individuals. There was Sally Yates made a memo in 2015 to this effect. I'd like to see us actually following through on that.
Ms. Lowe, I understand that some of the drug dealers that these banks were dealing with have gone to prison for long periods of time, but their enablers in the banks have not been penalized personally. No head of a bank, no CEO, have been placed in prison for knowingly laundering drug money.
That's correct. With respect to the very large cases, that is correct.
I yield back the balance of my time.
The lady's time has expired. With that, we go to the gentlelady from Utah. Ms. Love is recognized for 5 minutes.
Thank you so much for being here today. As a former mayor of a growing city, when I first started off at the city council, our city had a population of about 7,000 people. And it may seem like it's an easy task because there wasn't very much going on. You tend to learn that all of the decisions you make at the very beginning, you end up either reaping the benefits of or suffering the consequences of the decisions that you make very early on. But it's really interesting, as the city grew, the first people that were in our city were our credit unions and banks. And a lot of people kept asking, you know, why do we have so many banks and why do we have so many? They were the ones that were coming. And it wasn't until later that we realized that the small banks that were there and the credit unions that were in our community were the ones that were the lifeblood of our community. They were the ones that were helping support all the city events. They were the ones that were actually the financial credit. They were the ones giving the financial credit to all of our businesses that were there. And our city grew from, at that time, 7,000 to when I left, over 27,000, viable, growing city. And I'm so glad that I didn't listen to all of the people that were saying, we don't need any more banks, just, you know, start getting other businesses, because they were the ones that were a great foundation for our city. So I want to focus on striking the right balance of oversight and regulation. And I guess the question that I have, and if Ms. Anderson, if you can help me answer that, and we can go down the line as quickly as we possibly can, what kind of analysis must an institution conduct to provide adequate oversight and monitoring in compliance with BSA? So, and also, if I wasn't here for the whole thing, so if you answered this already, please forgive me.
So what we look at when we look at suspicious activity, we look at if there's a lot of money being transferred. We look to see whether that person has the salary from our records to justify that amount of cash in their account. And then we look to see, does the money stay in their deposit account, or is it quickly moved out? And then are there more than one individual? Is there more than one individual who has access to the accounts, and where is the money going? Is it going overseas? How long does it stay there? And so that's, for example, when we would file, because the funds are unknown. When we determine from our system that they're trying to avoid us filing a currency transaction report when they deposit more than $10,000, we also then file a suspicious activity report, as do others here. Sometimes it's more complicated because you have to look at many accounts if there's more than one individual, or the individual may have, you know, other accounts where they're joined with other people. And so that's why it takes so long to investigate when it's a true SAR filing, because it just looks suspicious on our end. We don't know if it's legal, but it doesn't look right based on what we know about our member.
Okay, so obviously a lot goes into that. And also, what is the result of the failure to comply?
So if you don't file, then there's no safe harbor. You're written up. There could be fines, especially if they find it to be willful. And so I know some institutions, sometimes if we're not sure whether we should file or not, we will file because there's a safe harbor for filing. And then if we decide not to file, we keep a spreadsheet of the reasons why we didn't file so that our examiner can see that we had good reasons for not filing.
Okay. Did you have something you wanted to add to that?
I think that was very well stated. I mean, I think the only information I'd sort of add, and Mr. DeVoe and I were talking about this earlier before the hearing began, is most of these banks are running proprietary systems that they purchase from a vendor that basically generates the alerts, and then it's up to them to investigate. A lot of the burden comes around, where do you set those dials? You can set those dials to generate 100 alerts a month or 1,000 alerts a month. And I think one of the concerns that banks of all sizes have is the regulators will tell you, you know what, you only generated 100 alerts, we want you to generate 500. But we're not aware of any analysis around why that is. And certainly we're not aware of any analysis about the quality of the SARs that are being filed and how many of them are actually leading to prosecutable cases. And that's where, when I talked earlier about sort of the big data problems here, it's a system that's just fundamentally lacking in rigor in terms of the metrics for assessing whether it's being successful or not. And that's not a very good system.
You know, as I look at all of this, my time has expired, but as I looked at all of this, striking that right balance is incredibly critical because these, again, you know, these institutions in a small community can make or break that community. And again, thank you for your expertise. Really appreciate it. I yield back.
Gentlelady's time has expired. With that, go to the gentleman from Washington. Mr. Heck is recognized for 5 minutes.
Thank you, Mr. Chairman. Hi. I'd like to preface this by stipulating to the consensus point of view that anything we can and should do in this area does not compromise our efforts in fighting terrorism. I think that's something on which we all agree. That said, I'm among those who believe that there is fertile soil here to cultivate regulatory modernization, as I would call it. And that has been brought about, that point of view on my part's been brought about by two things. The first is I took it upon myself earlier to go on tour of all the banks, big and small, or not all, but many credit unions, big and small in my district, to ask about what had happened to their regulatory compliance burden over the years. As you might imagine, it had increased very substantially, most graphically represented by piles of paper. I wish some of you had brought the piles of paper. Probably the most common complaint I got, frankly, was about SARS and compliance with Bank Secrecy Act and anti-money laundering. Probably, in fact, the preponderance, over a majority. And I'm not trying to pick a fight at all, but I found it interesting that in the main regulatory relief bill we passed here, the Choice Act, there was, count them, exactly 0 words related to bank secrecy or anti-money laundering, and that was the chief complaint I got. And it just seems to me, however, and I will offer this as a friendly suggestion to the chair, because I am grateful for this topic being heard, that it would be nice to hear from law enforcement as well. We learn more when we hear from both sides. I think about the CTRs. It defies my comprehension that we cannot update that to reflect inflation, but I want to hear what the other side says. I think our work product would be better if we had had an opportunity for that conversation. I also want to suggest, Ms. Anderson, I've asked over and over and over again for people to give me concrete examples of how we can improve regulatory burdens on financial institutions, and I found your testimony to be refreshingly specific and concrete, and I thank you for it very sincerely. The second reason I got very involved in this was when FinCEN published their guidance for banks serving marijuana businesses in the state of Washington, which the voters approved, as you know. They chose to legalize it and to regulate it. That guidance says that banks are required to check to make sure that marijuana businesses aren't violating any of, yes, count them, 14 federal priorities on marijuana. They're intuitively obvious. Don't sell to minors, don't sell across state lines, et cetera. That struck me as an incredible compliance burden, frankly, on these organizations. But you know what? Our state regulators had an unbelievably clever solution. Because the DOJ, the other hand, asked the state regulators to check against the same 14 federal priorities. So here's what happens in our state. The banks are able to look directly into the database of the Liquor and Cannabis Board, our state regulator, to see if there are any red flags for businesses. They're able to largely rely on the state to check for conformance with the 14 priorities and then piggyback on that work instead of duplicating it. And so my question is, how can that be a model for reform for other SARS filings? What statutory changes would be required in order to implement it if there is a possibility of doing this kind of creative database sharing very efficient, very quick? Any of you?
Yes, Congressman, and this sort of gets to the questions about AI, at least with regard to the largest firms that are my owners. We think there's extraordinary potential for, if not utility may be the wrong word, but sharing of expense, whether it's around account opening or account monitoring, and also sharing of data in order to make the algorithms work better. So, we think that's clearly the future here. That's where this database is going to end up going. as I said earlier, you're having 2 million SARs filed a year. So this is no longer a personal lead to a law enforcement person.
If I may, sir, on the issue of the number of SARs filed per year, when financial institutions submit SARs, if there are multiple financial institutions involved in that SARs, we are required to do duplicate investigations. And if there's a correspondent bank, a triplicate investigation. Why doesn't it make sense to just kick it up to the largest financial institution in that chain and say, it's your responsibility to do this? What benefit is there to multiple SARs when it's the same transaction?
There isn't. And then I think there's another case where you may have someone who's banking at 4 different banks. None of them file a SAR. But if they all had shared the information about that customer, the lights would have gone on and they would have said, oh, yes, we should all be filing a SAR. So that's also a potential concern.
Thank you. My time's long up. Thank you for your indulgence, Mr. Chair.
The gentleman's time has expired. And to respond to your suggestion, Mr. Heck, the problem with bringing law enforcement to this particular committee is that it actually goes into the purview of the Terrorism and Illicit Financing Committee. And so our intention is to work with the bank side of the issue here, and then marry this with perhaps a bill or suggestions or guidelines with the other committee who's doing very similar work, and that's what we want to try and accomplish here. So I appreciate your suggestion.
And I appreciate the explanation very much, Mr. Chair.
With that, we go to the gentleman from Georgia. Mr. Loudermilk is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank the panel for being here. And I'd like to direct my questions really around the transaction amount, the amount that that triggers the reporting and the investigation. I believe it was 1970 was when this was enacted. I mean, the first I found out about the BSA was when I left the Air Force in 1992. I was living in Alaska, moving back to my home state of Georgia. We sold our house. Fortunately, we made a little equity on it. I've got a truck with a trailer packed full of everything that I own, and I'm leaving Alaska to go to Georgia, and actually I was going to start over again, starting a new business, open a bank account. So I asked the bank to give me all my money, and they wouldn't. They said, all we can give you is less than $10,000. And I ended up getting my money through multiple transactions, but that's when I found out that they were reporting it. And as I was thinking about this, around 1970, I was still in elementary school at this time. My dad bought a house, paid $20,000 for this house. When my dad passed away, we sold this house, and it was in much worse condition than when he bought it. The neighborhood had gone downhill, and we sold it for over $100,000. When I'm looking at $10,000 in 1970, $10,000 today is not the same thing. It's got to be that a transfer of $10,000 is done multiple times on multiple accounts, especially when you think of somebody who has a sub-S corporation or there's some type of pass-through through their businesses. It's got to happen. I'm a small business owner. Several times in a month, we would have transactions of $10,000 or more happen quite often. I know in two of you, in your statement, you mentioned that if you adjust it for the rate of inflation, we're looking at somewhere around $60,000 today. Is that correct? So
$64,009.
Okay, and I believe the credit union said about $58,000 is what you guys calculated. You're using different interest rates now, so you may want to up yours. People invest more in credit unions, But I'm sorry, Mr. DeVoe. What do you think the appropriate threshold should be? I mean, is this is this a crux of part of the problem that we're having?
It's a good question, and the issue we have without knowing how the information is used, what's valuable, what's not valuable, it's very tough for us to say that it should be $5,000 or should be $25,000. It came about in 1970. And if you run it through CPI, it's $64,000 today. Or in other words, as you stated, $10,000 buys $1,500 worth of stuff today.
Yeah.
So without us having feedback saying, here's how we're using the CTRs, the currency transaction reports, and here's what works and here's what doesn't work, it's very difficult for banks on their size to be able to pick a number that works.
Okay. Ms. Anderson, would you like to respond?
Yes, for currency transaction reports, that's where we would have to file if there's a deposit or withdrawal of $10,000 more in cash. And so I was looking at a recent month and our activity for what we received. So if the currency transaction threshold was increased just to even $20,000, we had filed, we filed 27 when it was 10,000 and above. But if it was increased to $20,000, our filings would have dropped to just 5. And then, so that would be a great benefit, because if you don't file a CTR within 15 days, there's a large penalty, so we're always on the clock to file that. From the suspicious activity point of view, from the subpoenas that we've received that I'm aware of, it seems that law enforcement goes for the larger dollar items. Yeah. They're not concerned with 10,000 or 25,000. It seems like they go for a larger amount. So maybe just, you know, in the interim, just try doubling it just to see, so that it's $10,000 minimum instead of the $5,000, where you know who the perpetrator is, and then maybe instead of $25,000 where you don't know who the bad person is, you increase it to $50,000. At least just try it, and then we can at least determine you know, if there's anything there. And it would be very helpful if, when, you know, we respond to a subpoena and you know, they finally do go after the bad people, that we do receive some validation that, oh yes, because of you, your institution, we were able to go after this person or that ring of criminals.
So, and I'm running out of time here, but you do believe that we definitely need to address what this value is. I think that's what I'm hearing, but we really don't know what it is unless we get proper feedback from law enforcement. Is that kind of a good summary, Mr. Baer? I see.
Yeah, I mean, I referred to in my testimony that it's the last piece of the puzzle argument. I mean, there will always be a case where an $11,000 transaction was the last piece in the puzzle in some investigation. You know, just the way you could end up arresting somebody from jaywalking and they turn out to be, you know, a horrible criminal, right? But that doesn't mean you increase your jaywalking arrests. You actually have to do a cost-benefit analysis. Like, how much did that last piece of the puzzle cost you? And that's where Mr. DeVoe has it exactly right, which is we don't know because there are no metrics or analysis around that.
Thank you, Mr. Chairman.
The gentleman's time has expired. Now we'll go to Mr. Trott, the gentleman from Michigan, who's recognized for 5 minutes.
Thank you, Mr. Chairman. Before I begin my questions, I want to allow my good friend from Colorado to ask a follow-up question, so I yield to Mr. Tipton.
Thank you, Mr. Trott, for yielding. And Ms. DeVoe, I just wanted to be able to follow up a little bit on some of your testimony in terms of some of the examination, the compliance between smaller banks like yours and larger banks on the reporting. Do you basically feel that since you're smaller, that some of the activity actually gets magnified as opposed to a bigger bank when it comes to some of the compliance?
Yes, sir. It's a good question, and I think what happens is regulators are trained in a certain way. And they don't really see a lot of times the bank size or the risk of the bank. They just know how to do their exam. And so whether they're walking into a big bank or a small bank, they're applying all the same rules. They're looking for all the same percentages. As I mentioned earlier, we had 7,100 alerts generated last year. From those alerts, we filed 15 SARs. And we feel like we could tune our alerts a little better and probably still get 14 or 15 SARs out of it by not doing so much work. So a lot of times, and I'm not trying to be critical of regulators, but a lot of times it comes down to personality or the person that comes through the door. What is their specialty? What is their expertise? You can go through an exam at a bank 3 years, 3 times. On the 4th time, you get a different regulator, and the whole story changed. And what was good before is now bad. What was bad before is now good. So it is an issue for us.
Thank you. And I thank the gentleman for yielding to me and yield back.
Thank you. Mr. DeVoe, I want to continue to follow up on what you just said. And one of my concerns is the heavy hand of the regulators. So very quickly, I've heard stories that examiners telling institutions to file a certain number of CTRs and SARs, or they'll be written up for having a bad audit. Is that happening to your knowledge?
Yes, sir, it does happen. For clarification on CTRs, when the transaction is over $10,000, it's clear. You file a CTR. You file a currency transaction report. So if they ever come back and say you're not filing enough, it's because you didn't file some that you're required to file. But when it comes to SARs and when it comes to high-risk accounts and high-risk reviews and investigations, that is where the regulators want to see a certain number in a lot of cases. You can run your database, you get 3 or 4% high-risk accounts, and they can come back and say, you know what, this seems a little low. Maybe you should change your parameters and rerun your database again. So for me, a high-risk account is a high-risk account. It doesn't matter what your parameters are. It doesn't change just because you change dollar amounts and things like that.
Thanks, sir. Ms. Anderson, along the same lines, do you ever feel that the government uses the complex regulations to set banks and credit unions up to fail, or if not to fail, but to find a supposed error and then use that error to try and leverage the bank or the credit union to get some other concession as part of the audit?
Yes, from just what I've heard from also other credit unions, it does appear that Bank Secrecy Act exams can become a gotcha, especially if when you're looking at the whole examination, not just BSA, but lending, you know, the call report filing, and we have seen where you have just a minor discrepancy. You use a P.O. box instead of the street address. Clearly, we had the street address. It was just a minor issue, but you know, you don't fight it because you don't want to argue on that. If that's all they found, I guess that's great.
Thank you. So, Mr. Baer, you know, you work with the 25 largest banks you mentioned, and in my prior life, I represented most of those folks, and our biggest concern was reputational risk. If we did something that didn't reflect well, I used to joke my number one goal when representing Chase was not to make sure Jamie Dimon didn't know my name, and so any concern that maybe reporting a suspicious transaction or a mistake could cause reputational risk to a bank, particularly a large bank, which would thereafter cause them not to want to report that because of the risk or because of government action. I assume it's not happening, but that would be a terrible set of circumstances if the oversight caused them not to report something they should.
I think that all of the incentives are to file. There is a safe harbor if you file, so you're protected if you file, and it just goes into a big database. I would add, though, and to some extent, as Ms. Anderson was talking about, I mean, the regulators, the examiners here are in a very difficult position too. And as I highlighted in my testimony, it's not their fault that they're in a position where they don't get to know what law enforcement's doing with these SARs or what national security is doing with these SARs. What they know is if they don't have enough people written up or they don't have enough consent orders, they're going to be hauled to Washington and criticized for that. And then if, God forbid, something goes wrong at the institution they're examining, they're going to be held to account. And their only defense can be, I had them under a consent order, I wrote them up for 50 MRAs, it's not my fault.
Gotcha. Would an advisory opinion process help?
I'm sorry?
Would an advisory opinion process help?
I hadn't thought about that. Yeah, I think that could be helpful, yes.
Thank you. I yield back.
Gentleman's time has expired. With that, we go to the gentleman from Tennessee. Mr. Kustoff is recognized for 5 minutes.
Thank you, Mr. Chairman. Ms. Anderson, if I could ask you a question that's along the same track but a little bit different relating to real estate and real estate loans. In the last 12 months or so, according to the FBI Internet Crime Complaint Center, there have been supposedly over 3,000 victims who reported that the actual attempt or attempted theft of almost $400 million in assets through fraudulent wire transfers related to real estate transactions. That's a big increase over the last several years, and my concern is that these funds represent often the large majority of savings that are held by families who are being victimized. And if it's not detected within a few hours or several hours of the fraud taking place, as I understand it, it becomes almost impossible to recover that money as it gets laundered and transferred through a network of accounts and fraudulent schemes. There are sophisticated hackers that mine data to identify the victims near the conclusion of these real estate transactions, and they often mimic trusted participants, such as a real estate agent, a mortgage lender, or a closing agent, to provide transfer information that the victim has little or maybe no reason to suspect. With the real estate related email compromise schemes, is it common in your experience for the nominal payee who's listed on the instructions and the payment order not to match the holder of the account at the receiving institution?
Usually for us, when the name and the account number doesn't match, it's a red flag, and so we do more due diligence. And the fraud that you alluded to, where title, the customer will receive an email that to transfer the funds somewhere else. It's just recently come to our attention that that does happen, and so we try to be vigilant in informing our members who are purchasing houses, that. To be careful when they receive emails like that. For example, they need to be more vigilant on the side of with their title company. So the title companies need to also be vigilant and telling their customers, we would never send you an email telling you to transfer money from this account to another bank, because we do what we can for our side, for our members on our side, but it's hard to also control what's going on the other side, because we don't know what's going on that other side. We don't have that information.
Well, and I appreciate you saying that. Would your particular AML program catch that discrepancy?
Well, so the reason that how that is caught is through the training that we would give, for example, to the wire folks. So while it may be caught with our system, we get the cases at the beginning of every month. It's not a live system. Maybe our fraud system may catch it the next day, but really it's the training that you give to your employees that catches fraud right at the beginning.
And if I could, to follow up on that, do you know what your credit union does to double check that both the account number and the payee's name matches before sending a wire and making the funds available for withdrawal after a wire transfer?
So if we were the receiving institution, we make sure that the name and the account match the number, but generally, it's the account number that controls. But I know that when there is fraud, working with other financial institutions, sometimes you're able to talk to them if it hasn't processed yet. On the other side, if we were sending, but we do what we can to make sure our members' money is safe and gets into the right account.
As it relates to these email schemes, I would assume that you're seeing more and more of those type emails and situations relating to your customers?
Actually, I just heard of one just recently, and we were able to stop it.
Very good. Thank you, Mr. Chairman. I yield back my time.
Gentleman yields back his time. With that, we'll go to the gentlelady from New York. Ms. Tenney is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to the panel. I know this is a very, it's actually turned into an interesting discussion, and I've sort of started to have even more questions than I had before. And I appreciate you being here and your expertise on this issue. I recently took a trip to the Middle East, to Iraq, Afghanistan, Central Asia. And one of the issues that we came across was countering the financing of terrorism, which we discussed, and how many of these banking institutions end up being financed through porous borders in Central and South America, getting all the way to the Middle East, and how these are happening through banking and financial institutions. And it was a concern to me, and we had a lot of interesting conversations about what to do about that. And international banks, how to regulate banks, and what was really interesting is that a lot of it is cash. So there's no way, no matter how many regulations you put out, you are not going to be able to catch the virtual needle in a haystack, which it seems like you're describing here today, that we've been tasked with this enormous burden to try to find the needle in a haystack by combing through thousands of tiny transactions. As you indicated, a $10,000 transaction may not net something that maybe a $500 transaction would net. And I might reference that in 2007, we brought a New York governor down who ended up resigning over a $4,000 transaction in another state. So it really isn't the amount of the transaction, it's all the information that goes into it. And it just raised a lot of questions for me, and some of those are, what would be the approach that you would recommend? Because honestly, I'm a little leery about the idea of having a central network and worrying about a lot of concerns. Are we actually going to have an open case against an individual? Are there constitutional rights there, maybe a privacy right? And balancing that with obviously our need to find a lot of schemes through terrorism. I just thought I'd start maybe with Ms. Anderson or the credit bureau or any small banking institution, because many rural areas rely on you. What would you suggest that is a better way to make it more efficient for the bank or the credit union, and still being meaningful into finding cases of illegal, illicit money laundering, financial issues? I mean, what would you suggest quickly?
I think as we've, mentioned before, it would be good to know what law enforcement does with our information, because right now we don't know. So even though we're filing all these suspicious activity reports, we don't know if they're fruitless or if it is helping law enforcement. So that would be one step. And to the extent that anything can be automated, we need to make sure that smaller financial institutions, such as credit unions, that we have access to that, because it can be expensive. And then if there's anything else, I'll send in written testimony. Thank you.
Yeah, I mean, Mr. Barrett, and I just am curious. It just seems like we have this metadata type of idea. I hate to bring that in, but it just sounds like we're just collecting all this data when we don't really have a real defined mission. And you said we could isolate that. If you had just a quick comment on that,
Sure. I mean, I think it's kind of interesting. On behalf of the largest banks, I think I'd have pretty much the same observation that Ms. Anderson has on behalf of credit unions, and a lot of it's about getting better feedback and being smarter about it. I think with regard to the international issues you talk about, there's another component, which is there needs to be, and we believe as the Treasury Department, somebody really has to be in charge and has to put everyone in a room and decide what's the cost benefit of banks continuing to operate in Somalia, say. That may create terrorist risk, but there are development risks on the other side, diplomacy risks. But that's a decision that needs to be made by somebody with a very heavy title, we think, in our government. But right now is being made by default by bank examiners, where the push is always to de-risk and leave.
The pressure on banks and the pressure on banks to actually be the law enforcement as opposed to just a tool for law enforcement. And I thought maybe I could ask Mr. DeVoe, if you could just explain, I mean, how would you eliminate this idea? How would you, enhance what Ms. Anderson had said about whether it's redundant or inefficient, and what can we do to eliminate this this redundancy on banks that isn't really netting what we hope it would? I'm going to lose my time in a minute, but if you could answer quickly, I'd appreciate it. Thank you.
I think it really does come down to sharing of information and working together. I mentioned earlier that this has to be a team approach, and there are pieces of this work that need to be done in the most efficient place.
Can I ask quickly, is there a privacy issue with a private citizen with bank information that would expose banks to liability as well?
There is a privacy issue today, but on the other side of that, the more information you do share about customers may pull customers out of banks. They may want to go on, more customers may want to go underground if the information is being shared too much. So we have to balance that, but we do have to share. I think we have to share and work together.
Excellent point. Thank you very much, panel. I appreciate it.
Gentleman's time has expired. With that, we go to the gentleman from Florida. Mr. Posey is recognized for 5 minutes.
Thank you very much, Mr. Chairman. To the representatives of the banks and credit unions, do you feel that the federal government initiatives such as Operation Choke Point that seek to disrupt banking relationships with legal yet undesirable, according to the administration, businesses are concerning?
Congressman, that is a good question, and one I talked about earlier. When it comes down to banking certain types of businesses and certain types of customers, the burden is overwhelming. And in a lot of cases, these are legal businesses and these are small businesses. And so if we turn them away, it becomes very difficult for them to do business. So there are businesses that the regulators have deemed as high risk. And in a lot of cases, because they're small businesses, it's very tough for us to spend that time on them when we could more focus on our communities and developing the businesses that grow our community and grow our jobs, rather than have to spend all of our time trying to clear BSA issues on a business that's doomed high risk by a regulator.
I would like to add to that yes, there are certain types of businesses that are deemed high risk, and because of that, we know that under the regulations, the amount of due diligence that we would need to really get to know that business and monitor them is just, it would be too burdensome and not fair to the rest of our members that we're spending so much time on a particular type of business. So we actually discourage that type of business from having accounts at our credit union.
Okay. Do you think it's pertinent that financial institutions have due process and know if they are acting in compliance with applicable laws, not ideology or certain examiners who may personally disfavor a certain industry?
I'll address that. I mean, one of the other members alluded earlier to the phrase reputational risk, which to me is the most troubling in bank supervision currently, because what that really means is what you're doing is legal. You seem to have, you know, the risk under control, but I just don't like it. Therefore, it poses a reputational risk to you, namely because I'm going to say I don't like it as your regulator. And so it can become very circular and basically just boils down to, I don't have a legal basis for saying don't do this, but don't do this. And so, you know, whether it's BSA or in other areas, I think what banks really want is certainty and due process.
Anyone else? How do you know who you don't want to do business with per the government's bias against that business? How do you determine?
If we don't know before the examiners come in, we know after they come in, because they spend a lot of time digging through the high-risk businesses, you know, MSBs, you know, I can name a few, I won't name, but they continue to push and ask for more information and more due diligence and more oversight. And we had one recently where I actually had a friend that used to be at another bank that I knew used to bank the business, and I was talking to him about it. And he said, you know what? We even had an outside audit firm come in and do a full assessment of this business, and they said there's no risk in this business. The regulators never stopped. He said, my recommendation, don't do it.
Okay.
I would like to add to that. So, for example, if we file 2 or 3 suspicious activity reports because we don't know the sources of the funds, we will reach out to our member and ask them, would you please let us know, where are you getting this money, where is it going? So we, have to dig into their business. And if they won't respond to us, we don't want to keep on filing suspicious activity reports, and so we limit services.
Well, what would you say if I was a manufacturer of pistols, say, and I wanted to open up an account with your bank? Would you open an account with me if you know that I was manufacturing pistols?
In theory, if you answered all of our due diligence questions, then we would open the account. We just need to make sure that whatever you tell us at the beginning when you open an account and what you actually do once you have an account with us matches what you told us you would be doing. And if it doesn't match, then we may file a suspicious activity report, or we may go back to you and ask you what changed in your business and, how come you're using more cash or sending out more wires.
Okay. I had a manufacturer in my district, and his bank said, the government said, you can't bank with us anymore. You got to find somewhere else. And so every bank that he went to told him the same thing. That creates a life hazard, obviously, even for bad guys that know if you're in this business or this business or that business, you can't have a bank account. So you're going to have to be a target for a large amount of cash. Have you ever heard, Mr. Chairman, my time's up. I yield back. I'm sorry.
Gentleman's time has expired. With that, we go to the gentleman from Ohio. Mr. Davidson is recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you for your testimony today. Thank you for your written testimony as well. Mr. Bear, in particular, you've provided some good position papers, and one of the topics that's come up a fair bit is information sharing. And Mr. Pittenger, it's a topic that he and I don't agree on. We agree on lots of things, and the safe harbor that a lot of financial institutions want. Ms. Lowe, I believe you were the only one that addressed the concern on privacy there. So, we've just talked with Ms. Tenney and Mr. Posey expressing some concerns, and up till now, we really hadn't heard much on the concern of privacy. just kind of open question, in your assessment, should Americans have any expectation of privacy upon opening a bank account?
Well, yeah, Congressman, of course they should. I mean, the question is how far that privacy extends. I mean, clearly it's privacy with regard to disclosing to, non-law enforcement. And the question is, does it extend to other affiliates of that bank? Does it extend to other banks? Does it extend to law enforcement? I mean, there are clearly very difficult trade-offs here, and every bit of sharing for a law enforcement or national security purpose is incrementally less privacy for the person whose information is being shared, for sure. But, we've seen pilot projects, for example, there's one around human trafficking with, a group of banks getting together and sharing customer information with the approval, I believe, of FinCEN, and saying, can we make more cases on human trafficking? I think there you would say yes. I mean, the cost-benefit analysis there would be, yes, there was incrementally less privacy accorded those customers, but they were able to make cases they never would have made. And I think the information was cabined among the institutions that were doing that sharing. So I do think it's a very difficult issue, but I think our lean would be towards more sharing rather than less at this point.
And, okay, so let's say, yes, of course, I'm for catching human traffickers. We want to stop all the terrorists, all sorts of other things. But, we have the constitutional safeguards in place because we can see things that happen, as Mr. Posey alluded to, disfavored speech, shaming, and not even against the law, just not liked by a regulator. I wonder if Bernie Sanders would be okay banking, Mr. Vogt's church or Wheaton College or something after his testimony in the Senate recently. So we have these protections in the Bill of Rights for a reason, which was wise of our founders. How do you provide those safeguards today? Particularly, Mr. DeVoe, you're dealing with banks in Florida there, very similar to the Ohio issues, just different state, but a lot of the same challenges with the size of banks.
So privacy is a big issue. We do not share with other banks. There is a mechanism for doing that, but we generally do our investigation and we file our suspicious activity report. But I think the same question comes to the passport office and the driver's license office. Do they share that information? We're talking about money, which is an enabler of terrorism. So for me, I think there should be some sharing at some point along the way. Why would 5 banks write a SAR on the same customer or investigate a customer that looks like they're doing illegal activity when maybe they could file, I think, as I mentioned earlier, a short SAR, shoots it off to law enforcement, and they have a database of the bad guys? One of the things I talked about earlier also was a list called a 314 list that is provided by law enforcement to us. Those are the bad guys they're interested in. So they're sharing information with us saying, we're interested in these bad guys. We like that list. We can run that list very quickly, and we know exactly if we have any criminals, and we can report back to them.
And if the 314 list comes in, does that come in terms of a subpoena, or is that just a regular flow of information covered under 314A?
It comes in as a list. It comes in as a database that comes in multiple times during the year, and we just run our database against it.
Ms. Lowe, since you addressed privacy in your written remarks, just thoughts on privacy.
Thank you. Privacy definitely an issue. I think redress, some sort of way to have somebody be able to get their rights restored should there be a problem on the other end is important. But I think actually the technology today allows us to do a lot of different types of encryption and anonymization of data. And I think we really need to be looking in those areas as well to see if there are solutions, technological solutions that can be brought to bear to really protect privacy while also sharing information in a way that is useful for law enforcement.
Distributed ledger is very promising. So thank you all. My time has expired. Mr. Chairman, I yield back.
Gentlemen's time has expired, and with that, we are done with our questions, and we want to thank the panel for all of your great testimony and your answers today. You're very forthcoming. We certainly appreciate that. Just a couple of closing comments and thoughts. Appreciate what you've told us from the standpoint that, I think Mr. Heck probably said it best from the standpoint that we want to make sure we catch the bad guys and prohibit folks from doing illegal, illicit things. At the same time, the laws and rules we're talking about haven't been modernized. It was his term, and I thought it was a good term for a long, long time. And so we need to take a look at streamlining, updating. I think we've talked about technology as a good way, perhaps, that we need to utilize it better to streamline the process. Mr. Davison brought up some good points with regards to privacy, which somehow we've got to thread the needle between what the protection of the privacy of our customers, yet be able to find ways to ferret out the bad guys and illicit activities. What works, what doesn't work. I know you mentioned the Know Your Customer program. Maybe we need to take a look at fine-tuning that to find some streamlining. I appreciate your thoughts on that. Again, it was interesting, the discussion that was had by I think Mr. Laudermilk with regards to the level at which we decide to set the determination for. Is it 10,000 is really a good spot, and I appreciated somebody. I think Mr. Bauer, your inclination was, or your testimony was, that 10,070 was 64,000 a day. Is that what you said? Or Mr. DeVoe? There we go. I thought that was an interesting comment, and I appreciate that because it gives us some perspective. Maybe we need to take a look at that. Maybe we need to work with law enforcement and see where the sweet spot is there. So I think, as Mr. Heck alluded to, we're on on one side of this issue from the standpoint of the banks and the money folks, the financial services industry's rules and regulations. We need to go on the other side to also figure out law enforcement's perspective and how we can interface with those and find ways to come together. So. Reputational risk is something that is frustrating to me as a result of working all of these years with what's going on and the different rules and regulations, and now we've got examiners doing the choke point stuff, which is all based on reputational risk, and a lot of it's not really on illicit activity, and so we need to find ways to curtail that. So again, sincerely thank you for your testimony. You've given us a lot of good ideas, a lot of good information. We want to continue to work with each of you and your associations to come to some solutions, and can take those solutions then, as I said, to the law enforcement sector and see how we can find ways to actually make this system better, streamline it for your benefit, also at the same time helping them be able to do their job, which is to protect our country and our citizens. So with that, without objection, all members will have 5 legislative days within which to submit additional written questions for their witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witness to please respond as promptly as you're able. And without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. And with that, hearing is adjourned.